Hello traders, it's Samurai Trader here. Welcome to my trade recap video. Trades that are taken from the Day Traders Fast Track program. Traders, we really look at trading as easy as 1, 2, 3. Here are the 3 steps that we need to take. Number 1, we watch for the pattern, and that is probably one of the most essential parts of trading, is that your strategy be pattern based and also be very mechanical and rules based, which leads us into number 2. Does it meet the rules? You need to have a very clearly defined set of rules. Then of course number 3 is to execute the trade and manage the trade, and that becomes easier as you gain confidence in your trading setup. Now we're going to be looking at some charts and some trades in a moment. First of all, if you're new to my channel or to my videos, you need to please read the risk disclaimer, as there's always a risk in trading. And if you haven't already done so, down the bottom right hand corner you can click on that little button here and go full screen. Make it a little easier when we look at the charts. This is a photo that I cut out years ago out of an article, or cut out, it was online actually, and I saved this article about these 3 traders, and I've never forgotten it, because the article really was about trading hours, and it was headed "The Traders Who Skip Most of the Day." So they trade the open, the close, then golf. And as they said years ago, as floor traders, they'd be on the floor for hours and hours at an end. And during the middle of the day, of course, it was very quiet, and so we see most of the trading activity in the first hour or 2, and of course in the last hour or 2. So these 3 gentlemen, really, that's what they do. They just trade the open and they trade the close. With that being said, I also have another saying, is that within the first 15 minutes to 30 minutes, they're also known as the killing fields. That is, it's very easy to be slaughtered by the professionals, and I recommend in many cases that you jump to a higher time frame, because I'm just not quick enough. For an example, in most cases trading a 133 tick NQ bar chart, the market moves too fast for me. I like the 133, it's smooth, but within the first 15 to 30 minutes usually it's not a good time for me to be trading. So find an ideal time frame for you, and that's about to lead us into in a moment when we look at the Forex, because Forex is very dependent on the time of day. But before we get there, you may be wondering what Tom Hanks' face is doing here from that great movie Castaway. Well, for those that have seen the movie, you may remember when Tom Hanks is woken by the sound of metal, or I think it was actually aluminium, scraping against rocks, and he goes down and he looks at this bit of aluminium. He stands it up and he stares at it for ages and ages. What is he doing? He's thinking. Too often, traders, when we trade, we remember, that is, we remember past experiences, we remember negative experiences. When we go to the charts in a moment, I want you to be thinking when you look at these charts, how could I make this work? How can I improve this? And I want you to ponder when you go to your own charts, and to think, not to remember, but to think. And Richard Bandler, one of the inventors of NLP, neuro-linguistic program, talks a great deal about this, that most of us spend our lives on remembering past experiences instead of thinking about experiences, thinking how we can grow. Now, all of this of course is covered comprehensively in my courses. Don't go, we're about to go to the charts. If you haven't already subscribed to my channel, please do. And of course you can get I've now released my trendsetter cheat sheets, the training video, and my free 160-page ebook, The Truth About Day Trading. Please visit my website for that. Go there, fill it out, and I'll get those sent to you. But anyway, let's now go and have a look at, and one more thing, if you've got any questions, please drop me an email. My email address is there. But let's go and have a look at the charts, and let's have a look at some potential trade setups. Now, What you see before you is a fairly simple chart I've got on this chart, and I'm sorry for those that have heard this before, but it's very important. Again, we go through it. We've got a 200 EMA. The cyan one is an 89, then we have our 34, then we've got the 8. Then of course my little white paint bar here, that's a signal for my T1 signals, and down here of course we've got what, our T2s. Now what I want to get across in this video is just how important and how much more profitable you can be by following the 34, by trend trading only. So in this video I'm not even going to talk about the CT trades, the counter trends, because riches await you if you trend trade. And we can see here, what are we going to do? We're going to follow the 34. We had an entry, we had an entry, we had an entry. And this, by the way, we're looking at the Euro USD dollar, a 5 range. So every one of these candles here is worth $50. Now remember, you can trade minis or micros, which is a great way to get going if you're starting off with a smaller account. Now remember the trend set of rules: must kiss or almost kiss, because an almost kiss like this one over here, see how it hasn't touched? One of the things, if you want to do, is give yourself a little leeway, is you can give yourself, and let me quickly adjust this for you, and I'm sorry this wasn't already done, you can apply a channel, and you can see here we actually touched the channel if you want to give yourself a bit more leeway. But notice here we come down of a channel, we go to the long side, winner, 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 winner. We're now gone to the short side, we've gone up and kissed the channel, winner. So traders, there are fantastic trend trades every day, but what you want to do is give yourself, particularly when you're first learning to trade, or if you're coming back from a tough time of trading, to make your trading very mechanical. Now what else are we going to check, particularly being Forex trading here? We're going to check red flag news. Now remember, news is not our friend in most cases. Unless you're a breakout trader or a news trader, you want to be very careful when you get the red flag. So check your news announcements. And you can see here that we had an almost touch here. We can see here where we've got, well actually I'm going to mention divergence here. Okay, this trade failed, but here was your next one. So let me quickly go through the rules again. Sloping 34 with an agreement of the 8 EMA. The 8 has gone across here, so what have we got? We've got right here, and let me, sorry traders, I'm just trying to get to one of my tools here, is we've got there, the cross here is a T20, a change in market direction. T20 long, down here short. Now one other warning traders is this: be very careful when you come down, when you're hitting your 89 and 200, and you can see there's a lot of support resistance, in this case support initially. However, if you look at this here, the 8 has gone under for 34. You had a T1 signal, and bang, away it went to the short side. So that is Forex. So let's have a look and apply it on futures. And in this particular case, I've got a couple of other things. We're going to look at it slightly differently. We're looking at a 50 CCI just for an extra, in this case, helping you confirm the trend as an idea. I don't use the CCI because visually I know that when the 8 EMA crosses through the 34, what have we got? It almost coincides exactly with a 0 line cross on a 50 CCI. Pardon me. You can see it there, you can see it here. Look at that. Mathematically, for some reason, and I'm no mathematician, you can see when you get those crossovers, you get a 0 line cross on a 50 CCI. So this is by the way, the date today, it's the 11th of the 11th, Remembrance Day down here in Australia, and it is of course the 10th, or the 11th of a 10th, as my US colleagues call it there. So this is the chart we're looking at here, is an NQ. 133 tick chart. Now remember, these setups work on all markets and all time frames. Be very wary of a strategy that only works on certain markets, certain time frames, because we start to get involved in what we call curve fitting. That is where it's curve fit to suit a certain time frame. If it is curve fitted, it is much more likely to fail. So let's have a look at some trade setups here. Okay, here we've got our classic 34 bounce here. You can see here this is also for my students a perfect T10. Now you had another a T2 here, but a little word of warning I want to mention here. That is, remember, the further away price action moves from your 34, you are more likely to have a pullback. Likewise, when you see price action close back under the 8 EMA, that is a warning signal for pullback. So here price has gone up, it's gapped away from the 8 as it did there. Notice how price has gapped away from the 8 EMA as it's done here, but then finally price closed under here. And for the counter trend boys, and actually I'm not meant to be talking about counter trend trades in this, but I will mention it once. When you close back under, it's a good signal to short the market, and away we go. Now what I wanted to point out was here, when you start to get these lower highs, it's another good indication. So here you can I know it's a little hard to see. Let me just move this down for you. Okay, so see here that we've now got an angle here. That is, I've got a lower high. It's also a T1 and a close under the 8. And what have I got right here? I have a T20. Bang, away it goes. So here's our first kiss. Remember, your first 2 trades in the trend are going to be your best. One. So where you want to be squeezing your 21 ticks out of this as a minimum, which is $105, 4 of these a day, you've hit your 400 a day per contract, you're away. So you've got your T20, a perfect T20, another lovely T20. Now a quick reminder on the T20s traders, if you get a T20 entry and you're well away from the 34, wait for your first pullback. Okay, as we had it here. That wasn't too bad. You could have easily traded that one because you had a T10 and a lower high, and price action was still very close to your 34, so it was very tradable. Then you had another one here. Let's now go back, put it back in scale. You then had another lovely 34B. This turned into an 89B, but with the trend once again. And let's have a look here. Another T20 crossover. Now on this particular one, following the 34, you would have been stopped on this trade. You can see here we've gone up again, bounced on the 89, come down, you had a secondary entry. Now if you're following the rules, your stop would have been 2 ticks under here, and if on your first and second trade you are targeting 21 ticks, okay, you hit it up here, you're away again. When you had this pullback off this 200 bounce, which is something for another lesson, you can see here you come back down here, you're well and truly still kept in the trade. Then we had a 89 bounce here, had another 89 bounce, which is also a 34 bounce, that was just touched on the channel. It's also a T2, and away you go. So traders, once again, another incredibly profitable day of trading. Getting back to what I mentioned before, you watch and wait for the pattern. Okay, you're watching and waiting for the pattern. Likewise, right now I'm short on 10 contracts on the ES on a pattern, a 34 bounce. Okay, I'm short right now. By the way, you're not going to get this for an hour or two, so this trade will be well and truly over by then. So to get more details on the trend set of a 34B, go to my website, fill out the pop-up box and I'll get it to you within usually within a number of hours. It also give you access to my trend setter video. To invest in the fast track program, your investment's only $197. Either way, get the trend setter. The trend setter is a kick-ass, whoops, sorry for the language, ladies, kick-ass program. Day trading and swing trading strategies. Traders, thank you very much. Look forward to seeing you in my next recap in the next day or two.